So this is Monday, January 24th. Markets are very, very volatile. I kind of wanted to do something different today because I've been having discussions with some traders who sent me their trades. So in the next several videos, I'm planning to have a trade review with some traders who basically have a hard time reviewing their trades and want to kind of want my input in regards to what I see and what they could do to kind of you know give themselves a better review when they're trading. It's going to basically be a couple of trades where one trader was trading it mostly on Quant Tower, sorry. So this is Quant Tower, the video that that he sent to me. We're going to be able to review some of his trades here, and I'm going to also add some details in regards to nuances that I see and some stuff that he this trader could actually do to kind of um, improve his way of validating setups and what the tape's really doing. So I'll cover all this here on this video here. Hope this helps, as this was a really fun way to validate certain things that other traders are doing and how they see the market. And at the same time, I'm going to give him a nice little input in what he should probably do, and it should definitely be a nice little experience here. So first of all, if I start off the video here, he is using Quant Tower, which is pretty cool as a platform when it comes to trading on the DOM, because it basically shows here how big the spread is when it comes to NASDAQ. You're also able to kind of customize the way you want to see your DOM here. You're able to put it within 2-3 ticks if you want, if you don't want to see every price. That's a little detail that Quant Tower permits, which I think is pretty cool if you know, as a trader, if you need that. If you compare this, what you're seeing on my screen here, to what I have on Jigsaw. So this is my screen. Quickly, I'll move this around. So this is basically what I'm seeing here. I'm going to try to do some comparisons between what I see and how this trader could use certain little details here. What the trader is doing is basically using the inside prints to give him value in where the market wants to trade, and then he's able to enter long or short. And if the market keeps coming back into that area, it basically means it wants to go in that same direction. So I get the whole purpose of seeing value with the inside prints. It's just that when I compare my layout here, I've got ES, right? Some little detail here where, like, if your left eye is stronger than your right eye, which is kind of my case, I like to have something that I need to just focus on. Let's say I see NASDAQ going down here and then ES is kind of following. So if I had NASDAQ on the other side, my right eye is a bit weaker compared to the left. So you can sometimes play around with the domes that you have and the tapes to kind of give you the best view of what you need. Sometimes it's small little details, but that could make a huge difference in how you see the market and how you see the correlations. As here, we've got a NASDAQ that's already above the center line and is coming back into it, right? So that's quickly, my eye is quickly seeing that NASDAQ's strong here, right? So if NASDAQ's strong and I was looking for a short on ES, I could have probably canceled that order to go short, right? So I put my large lots here, 20 plus lots here. Actually, it's 15 plus on ES. I separated the bids and the asks just because it was just easier for me to see which side is kind of aggressive when I did this. I kind of compared, and I think I like this layout for now. For the purpose of the video here, I turned out tick strike. I put it off just because it'll distract us when it'll make some noise here. But all this volatility, tick strike's been giving a great uh, as a tool. It's been giving good samples of correlations. Here in this moment here, you see, I'm seeing quickly on the tape. That's where I'm seeing value. 36 is on NASDAQ, right? So 36 is on NASDAQ. Coming back into that just shows me either NASDAQ is rotating or it's weak. So if it's doing that, I could look for a short on ES here. You see, the big lot just came in on ES and got absorbed quickly. It's a quick way to monitor what the market's doing. I don't see anything here. It's just like sweeps one way or another on Nasdaq. So it's tough to really. And then you had some stops here at 42s. So we can't really get above those stops, which we just did now. But if you look at the way the value was created, it was created around 52s. So if you go long here on the 52s, which the market is most likely not going to come back to because we're very aggressively long biased here. The 67s are valued now on Nasdaq. If you want to take a short, you would really not want the market to fiddle around too much with your 67 here. You understand? So if more it touches that value, I'm kind of thinking that it's not the best short idea. However, if it comes back to 67, I don't want to go short anymore. Sorry, I don't want to go long anymore because now market is kind of seeking new value, which it did around the 60s. I can take a short here at the 60s, which because now that worked out perfectly, and there you go. It's a quick visual way of seeing what Nasdaq is doing on a value purpose with my tape here, and I don't really want to look into too much of the prints because I've got my dome from 34s to 45, which is around 10 points. That's what I like on my Nasdaq dome. So just quickly, this was just a quick nuance on how I could quickly measure what Nasdaq is doing compared to ES. Here Nasdaq is looking weak, but then ES is above it was above its center line, right? So it's, I mean, again, that's not a way to just say which one is stronger, but here as 24s were very aggressive here on Nasdaq, you can come back and see if you can want to sell the 24s here, and the market is really pushing one-sided here. 17s were value. I would like to short, but the thing is, the market doesn't look like it wants to come back into it, so it's very weak. Seeing Nasdaq being super weak like this, I can hit my screens here and just want to basically take everything out. You can look at the inside prints, but the tape is quickly telling me where value is. At the moment, it's just sweeping one side to another, so there's no real value to see where the two-way auction is. But if I just recenter, which is one thing you always have to do, if you really want to compare the force and which market is kind of stronger compared to the other, you need to recenter your domes a bit often. So it's just a quick nuance here. Just wanted to cover that before I start the trade review with the trader here. So here we are. Let's see here. What I'm noticing is he's just preparing for the open on here, and you know, with the markets being super volatile, you'll see how the spread does widen out a lot. It gets to 6 to 8 ticks sometimes, yeah, at some various areas. I'm just going to quickly go. He doesn't use any specific indicator. He's just got the 1 minute chart or the 500 lots volume chart here on Nasdaq, which is perfect. And then that he's got the tape. One little thing I want to really mention here with the tape is that he doesn't highlight the tape. It doesn't give me a clear way to have where value is. So he's mainly biased. He's mainly watching value on the inside prints here, and also, normally speaking, as you all know, I have ES and Nasdaq on one side when I'm doing my screen recordings because it's really important to see that correlation. He told me that he's got ES on a separate screen and he didn't put the recording at the same time. It's just that when you would put Nasdaq here, maybe with all the space here, he could put the chart a bit smaller and have the ES and DOM and ES tape just to record that. And when he's going back to see his recordings, that's going to help when you compare your entries and all that. Because when I'm doing my trade reviews personally as well, I solely focus on several nuances, which I'm going to type here. So I had tweeted that earlier on Twitter. So when you're reviewing your trades, you always want to go back and see what the context was. Where was value? How volatile were the markets? How big were the rotations? And then market correlations, right? That's why I have ES and Nasdaq at the same time. Was my entry passive or aggressive? Did I hit the market, or did I wait for the market to come to me? More of a passive entry. And also, did I have a chance to scratch a trade if really the trade didn't look all that good? And one criteria here for that is that you don't want to see a trade come back into your price too often, right? So I mean, on a chart that's not very obvious, but on a dome, if you were For instance, you see this as value 49s and you're looking to short. If you see the market coming in, coming back, and then kind of doing this, you don't want to really hold on to that short because the high odds is that the market's going to most likely go higher for to discover prices at the, and if you had value at 49s, you come back and how far does it go from that 49? Because again, this is not the example here, but if 49 was my value and the market's able to go down all the way to 40 or 42s here, that kind of gives me a sense of 6 to 8 points within the rotations, right? If it goes back all the way down and it kind of comes back into my previous value, it tells me that that's how far normally the market is moving. And if you really want to put a stop, I think that's how far you should play your stops in these kind of conditions. Okay, so uh, that was just a quick view of, you know, uh, what to look for when you're trading and what makes a good trade or not. Okay, so without really spending too much time on it, I just want to go quickly to his trade, which the trader had here. Let's see, it was around this time here. So again, it's not super clear sometimes when you're trading on Quant Tower. It's just me personally. I just find that the entry doesn't look super clear. But here, let's look at it. So we're looking at the market quickly. As the market's kind of in this range, he is going long, I believe, and he's spotting. He's kind of telling me there that he's planning to go long. Puts his order passively, wants to go long at that level 206. He's long there, and I think he had a pretty good trade where the market kind of came into his area very quickly. So if you look at the chart, I mean, it's slightly in an uptrend. So I mean, I think he was long biased there, but looking at the value on the inside prints, he was able to validate where he saw value and he let the market come back at a certain level to be for a passive entry. Looks like the trade was pretty neat, not too complicated. He got a pretty good run on it, and I think at some point he's going to take some notes and mention where he had seen the value. Here he writes down his notes. He's going to sit on hands and look for some good setups. That's what he's mentioning. Again, one thing here is that if he was able to have the ES and the NASDAQ DOM, I'd say we would have a good example of what the market's really doing. Because sometimes, if you look at my DOM here, quickly on an example basis, if I reset everything and clear all the trades, we're going to most likely have a good sense of where the market wants to go. Look at ES, hovering just at the center line, not really super aggressive to the downside. So you see NASDAQ is pushing higher. So it's quick way to say, okay, if I had any kind of a sell order and I saw ES kind of like hovering above the center line, it's telling me that ES is at least rotating 4 to 8 ticks here. And if it's rotating 4 to 8 ticks, I mean, I might be off on my entry if I really wanted to see. There's always one market that's a bit more aggressive or leading. So it's tough to kind of trade the leading market if both markets are super volatile like this. So look at ES. Let's just recenter all this and look at ES, right? It's down around 8 ticks here in the near my center line. So that quickly tells me that 8 ticks is kind of like in these conditions, 8 ticks would be kind of like the ideal area to go long or short. And you see it didn't touch me. So now I have to cancel that because I'm too aggressive there. And now the market's just gone without me because it didn't fill my entry there, right? So I always recenter to give myself an idea of what the market could do. And again, this is just a quick way of seeing the rotations because with this pace of market, this market is really tough to trade just based off tape. And if you're looking at what the market's really doing, look at how we don't even have like major lots coming in at all. My 15 plus tape isn't even moving almost. I'm just gonna double check. Yeah, and they're all there. It's just now we just got something here at the 98s and they just came in now very aggressively. You see, sometimes you can't just have tape telling you what it's doing in these kind of fast conditions. You just need to see at which level value is. And I could have I can have a basically a hotkey that could tell me here. Obviously, here and now it's 2:30 in the afternoon. It's really very, very volatile. But keep in mind that it's still tradable because it's not the open. The open was very, very volatile today. So if I'm looking at ES here hovering around the center line and Nasdaq's at the lows, I'm not too sure if I want to go with a long here, you know. So what I would do is I would just recenter, clear the trades, get a new fresh idea of what's going on, and I could sometimes when I do this, I have a bias because I know that one of them is easier to trade. Okay, so I've got a bias here to go short on Nasdaq because it's basically looking pretty weak, and there we are. You see, because it did two levels of value and never came back to touch it. So that quickly told me that value was shifting towards towards the downside, and I made a quick entry there. And now we've got 26s, which seem to be the value here on Nasdaq. And again, very weak, so I want to go with the short idea here on ES. Put a quick stop here. Okay, come back, get it at break even, and get out. You see that was a quick scalp, but I took it out with a break even because I see a NASDAQ that's pretty weak. Okay, coming back to his video now. Just want to make sure I don't lose track of where we were. So basically, he's saying that he wants to sit on hands to see what you know, a good setup. Again, a good setup. I'm not too sure exactly what a good setup for him is. He's probably just, you know, thinking that it's a bit too volatile. So let's see what other notes he's gonna add here. Yeah, he's also mentioning how the spread is getting pretty wide. You know, in some cases you might think that's actually a good thing because with a market that's going one directional, let's say, and then you've got a spread that's getting wider, high odds it's going to continue in that direction for some time. So it's just a quick matter of, you know, of seeing how if we've got a spread that's really increasing in a directional bias, you know, we're at 15s and we're getting to 20s, 24s, that's the direction you really want to go with. Okay, so that's one little nuance if you want to keep that tidbit as trading on a dome with a thin market like the crude or the Nasdaq. As you see, the spread was around 8 to 10 ticks a bit earlier, and we had 215 to 240, which is a huge move here. Okay, so here he's saying that he missed that entry, which he thought that 33 was around the 33s was value, and he wanted to go back, pivoted above these double tops, and it's kind of coming back in. So he is planning to go long. He's got the limit order waiting. I'm just gonna put my mouse aside. That was very quick, but he actually uh, did not take a trade there. Let me see here. Yeah, so fast forwarding quickly, he is planning to go long here, and he's got a limit order that's already created. Now within the next 10 seconds, he's going to go with his trade. So he's pointing out where value is. It's tough to get a good idea of exactly where he's entering, but he's already long at the 239s, and he's going to basically scratch that because I noticed how he was able to take, and that was a quick little trade there. He's actually going to put some notes here. I'm going to get on to the details once he writes his notes. Yeah, he scratched that trade. I saw it quickly too, where if we look at it quickly back, and you can actually go back. What happened there is he is basically looking, let's say, for an entry long here. The market came back in, did this, and it was filling too much. It wasn't moving fast enough with that entry. Since it was doing that, there's a high odds that he's going to most likely get run over, and maybe the market will go with lower to get a price discovery a bit lower, and he'll be stuck with a long position and with a market going against him. That's one thing I think I'm suggesting to him, is that he really needs to get this tape uh, with maybe 2 and 3 lots highlighted just for Nasdaq to see quickly on the tape as well, approximately where the market is going long. And the only little thing that he is missing here is, you know, an ES dome, where if ES is kind of like already doing this, and you've got a value, let's say at 60s, right, and you want to go long here, ideally that would not be a good trade because you already got ES going lower and you're waiting for a pullback for an entry. So I would, let's say, if I had my long limit order there and an ES going low. Again, it's tough to really draw it on a DOM, but I would cancel that because high odds it might actually do this and really get some momentum because you already have one market that's leading. So that's a little nuance. I propose that to him to have at least the ES DOM to give us a good example of where the market is. And that's why on, again, I'm just reiterating, that's why I have my NASDAQ one side, ES here. I could quickly see what ES is doing compared to my NASDAQ as well. Here at the moment, there's no real sense of value where both markets are kind of, hovering around. And now they've suddenly became, a bit, and here I would get that trade quickly. You see, it's just all about feeling with the correlation of what the other market is doing. And once you notice that that correlation or that sentiment has changed, that's where you would say, okay, now I'm just going to play Nasdaq with its values and see how they shift together. As today, really, even though one made a low, I mean, I can't really show it to you now, but Russell, ES, and Nasdaq have clearly been rotating both in same direction. I could actually look for a long here because you see, and it did not tag my long, so that's too late now. In these quick markets, you could not, you have to really be able to adapt. In these quick markets, if you're looking for a long, and let's say my order is here, it's too late now. You see the momentum is shifting around this area here is where I want to go long and take that long quickly. This is MNQ, but it's not important. It's the same market that's moving around here. Okay, and one thing you could do is if you're playing this volatility, you could play maybe 3 lots of micro Nasdaq and really have a good idea of where the market is going. Here we've got some, we've got some weakness again in this market, and my entry missed. So that weakness was based off how NQ had, shifted value a bit lower there, and I was looking for a quick scalp on ES. But now what's going on is ES is barely doing 3 ticks below my center line, which is kind of my quick way to say, all right, it's not very weak, so I could look for like a trade here, right, and then go long, and there you go. And you see, it's basically almost giving us only 4 ticks. If you're expecting more than 4 ticks here, it's going to come back, which it exactly came back now. You see, that's the only really way to really kind of play these markets, especially just having that quick value on tape. And that's what I'm suggesting to this trader, so he could at least have a comparative of what ES is doing when he's trading. Okay. So basically, I've been scalping that momentum all day long and really had 1 or 2 good runners. What is it today? It's January 24th. So again, quickly going back to the trader's trades here. It's just too bad that he missed this move down because he didn't record that, but like the market had gone up and then basically this move down, he didn't really take any trades. That could have been a great opportunity to have some nice momentum, as really it was very clear that if you look at here on the DOM here, uh, I could clearly sense that 210s were basically value, and the market just moved a good chunk lower from that area. If we just fast forward here, you see. Okay, so basically he is going to take a trade here within the next couple of minutes. I'm just going to fast forward the trade here a bit. I think that was it. Okay, so let's get to that trade. Yeah, so I quickly noticed that he's recalculating his value here when it comes to he's looking for an area to basically go long, if I'm not mistaken. Yeah, 14164s. 14164s has his order, and he is tagged, gone long, and not too sure what happened there, but he seems to have made a very quick scalp that uh, I think he could have kept that trade, which I'm not too sure why he took the quick 5 point gain there. He says that he scratched it, but I kind of noticed that he basically, and the market's coming back into that 164 now. So the coming back to the idea of a market that comes in, goes up, and then comes back into that entry, well, it's probably because you already have a shift of value between that area and where the market moved to. So he's taking that. Maybe that's a mistake, maybe, but he says that there was a price rip. So I'm just gonna go back to his next trade. I have like a couple of trades that he did, and again, this was really to give him a quick view of what. And I said, look, instead of giving you just one little note of what's going on, let me just put it on a video and I'll post it on YouTube. And he was very open with that, so I kind of wanted to really cover this. Again, he's basically using the inside prints to give him the value of where the market wants to do a two-way business, and then he's putting out a buy order, buy limit, either sorry, a limit order either to sell or to go long. The issue with that again is he's missing the whole correlations part, where if he is seeing value at a certain level, let's say in this case, which was around the 170s, okay, we've got some volume that printed here. If he's going to go long around the 62s or the 60s, he's going to have to look at ES, what it's doing at that same time. If ES is just driving lower and you're waiting for a buy limit at 160s, you might have a little issue with that order. So it's nuanced, but in these very fast markets, once again, if you look at how my domes are working, if I recenter, you get a very good sentiment of what the market wants to do. It basically wants to go lower here. Okay, you got Russell, you got an ES, and you've got a Nasdaq. They're all moving in the same direction. You do not want to have a buy order just to say, okay, I think the market comes here. Look, it might get to that part, but you know, what you could lose when it does a certain number of ticks. Look at how the market rotates, how many ticks, how much movement does it take for the market to reverse. Okay, that's one thing that's kind of missing on his screen here, which I think is a crucial detail. So in this last trade, he's basically looking for a long entry, but you know, again, I'm just going to reiterate how he could have probably had a better idea of this, if this was a good trade or not, if he had an ES dome next to him, because just having a chart like this is very biased. You know, it looks like, okay, we just had a move down, we've got a huge move higher, we're kind of like in this big range where you could have, you know, both directions and play it both sides. But if he was able to put a ES dome at the same time and really validate how market came into his entry here, because he's got a long at 42s, 142, which is at the bottom here, as you can see, and he's going to take some heat on this trade because the market really moved very fast against him. And what he told me here is that he had a long bias because of how the market had already pushed higher. But the bias situation, just based off a chart and maybe looking for okay, this is a really good area to spot for, I think he's averaging in another lot here. He's got two, and now the market starts to move really in his direction. I'm not saying we should never do that, but it's one of those things where trading on, basically just off this and not looking at what ES was doing, I would have said if ES was basically going into an area where the market looked really long biased, and you would see the pressure on the ES tape, and you would say, okay, I'll leg into a couple of Nasdaqs here. I would say that's a good idea. But it's tough to always, you know, going back, this looks like a really good trade when it made a decent runner like that, as obviously just did a pullback. His execution or his entry was maybe just a bit off. But again, it's tough because he's putting value in the inside prints and then putting the order a bit lower. But if you do that just based off one index or just based off Nasdaq, you would have to really validate that that's working out with the market correlations. If all the three domes, all the three markets were going down at the same time, which I could clearly see that, and that's why I have them highlighted here in yellow, because I could right quickly glance at what the market's doing. We've got a Russell and a Nasdaq that's really weak here, you see, and let's say I'm looking for a long on ES, that would really not be a good idea at all, you see. And now I'm chasing the market, but since all of them are doing the same thing, I could hit that because they all moved higher. So, you know, it's not only about the inside prints here, it's also about the correlations. I could recenter them all and just have a quick glance of what they're doing. They're moving higher together, and my NASDAQ hasn't even recentered yet. So that's an option that you have here on Jigsaw, which I kind of like. Sometimes to monitor the volatility, you have what we call how far the market could go with auto center. For ES, actually, I should probably put that to like 20 ticks because 20 ticks would be 84 to 94, so that would be like 10 points, which is 40 ticks in total. So if the market does actually do a 20 tick move, I know that for this volatility extreme here, this is pretty much like how far it should go. And now I would be chasing if I wanted to go long, and it recenters here automatically. So you kind of have to have your personal touch and customize this, but that's what I like with Jigsaw, having them like that in my tape, which I know having used Quant Tower here, it's a bit confusing how to set the tapes and all that with Quant Tower, which I totally hated. That's pretty much one reason why I believe Jigsaw is super user friendly. And other than that, when I get to like the nuances, what I would really want this trader to do is put ES as well. Maybe just put the chart a bit smaller so that he could fit in the ES dome. I think a good reason why he wasn't doing that is because it heats up his computer when he was trying to put all the domes and tapes together. That was really one reason why I updated my trading laptop, because I was trading off a regular laptop, which was okay, was doing it fine. But then when I had too many screens and I was trying to do all my screen editing and all that, it would kind of like slow things down. So I went and got a gamer laptop, and really made a huge difference in my trading, because that was the main uh, thing when it came to putting all my domes together and really having a good feel of how I should review my trades. And I think that was a game changer for me. So, I mean, having a gamer laptop, it works perfectly fine. I'm able to open up so many things, and it really doesn't increase the CPU all that much, because I also have Sierra charts that I use just for my footprint and charting purposes. But really, if you really want to become a good trader, you really want to stick to basics. I think having the domes and the tape just like this will totally be enough. All you really have to look at is what are the markets doing together, and how far are they moving from the center line, to try to give me a good example of what kind of volatility the market is getting. As you see here, I can't get a good sense of where value is because it's too close to the center line, so I would just have to recenter everything, get all the domes, re-put them in order here, and then validate that NASDAQ is giving me a very clear indication of where value is. It's around 19s, and it's basically moving lower. So if it comes back to the 19s, which is this area right here, I would like to short. But now ES is moving too fast, and it's gone already very fast. If ES is this high already like this, I should actually cancel that order, you see, because now it's going to most likely run over me, which would have been in this context here would have been probably a good trade. But having an ES that was really aggressive like that, my order right there would have been a bit too close, and I think I would have probably not had a good chance to manage it. So it's all about managing the trade, and now we're much above that 19 which we had as value earlier, and we could clearly see here that ES is actually uh, moving in direction. It's moving higher, and it's kind of leading at this moment, because the leader does definitely change within the day. So these were all the trades of the day. Pretty fun to trade if you are a quick scalper on dome and on tape. Other than that, momentum based trades also work perfectly in these conditions, but you really need to be able to you know look at how markets are correlating together, and they're all moving lower here. So at this moment, let's say I had a long bias or whatever for any reason on ES, let's say it would have been a bit of an aggressive entry. However, looking at the rotations, it looks like ES is probably rotating within 10 to 12 ticks. So 93s go to 10 to 12 ticks would bring you up to here, right? So that entry would have been pretty much okay for these conditions. Okay, so little nuances there. Wanted to cover that, and also reviewing the trader's couple of trades here to give him some advice on how he could review his trades and maybe put his screen, put up the ES tape in screen there. Just wanted to add all that in. Hope this helps. And a quick way to validate which market's kind of moving, and which one is leading. Basically, you could have ratio charts to do that. If you're not able to see it on your dome and it's not clear for you, sometimes ratio charts will make a huge difference. So what I kind of like in these areas is we want to see where the market is kind of chopping, making a new, where the ratio chart is making a new high and then making a new low. You know that these conditions are where you could basically go into spreads. You could be long, let's say long ES, and you want to be one short NQ in these conditions. And you know that the spread will come back into a pretty much a medium, an average level. Again, it wasn't very obvious in certain areas, but like this area would have worked out pretty well. I know these are like 1 minute candle lines, but you know that's where you notice how on one side you've got a market that's making a new high and then it's making a new low in this ratio chart. You know that this area basically between 230 to 3ish, this would have been a good area to place some spreads. It's just a quick way to measure the volatility between the two indices. One when the direction basically means that ES is just moving faster compared to Nasdaq, or in this case here, Nasdaq was much more aggressive compared to ES. And in some days this is much more easier to kind of read. If you look at the previous day here, we had a lot of areas where the market kind of made a new high and then a new low, a new high and a new low, coming to a ratio basically around the 12 o'clock. So it's very normal that it kind of does this kind of consolidation, but then it kind of continued in the afternoon as well, and then you had some periods where it made a new high and a new low, which just clearly tells you, and this is very clear on dome. More you practice it, more you'll have a better idea of this, because in these quick volatile uh, markets, you really have to pay attention to these correlations. And again, being a quick scalper here, let's say I was planning to go long here on ES, the idea would not be that bad because we've got a Nasdaq that's basically been doing inside out through my center line, which was the 164s. And since it's doing that, I can basically look for a long, and I can also look for a good area to scalp again. And if I look at the quick rotations, it's around 4 to 8 ticks, so don't expect. And we've got 70 being value here on Nasdaq, comes into my 70s, and it's look at that, didn't even give me the entry. So now 82s are quickly where value is, and it's not moving too much against value, so it's basically a long market here. You don't want to go short seeing that kind of quick rotations. And you see ES, so what you can do is, if you're looking for a long on Nasdaq here, you're probably not going to get it within right away, because look, the market's basically not even pulling back into that previous value. So it's shifting value again towards one direction, and you want to continue with that direction unless you look at the 90s and you don't really have any real momentum coming in from both sides. So if I see 90 as being value and the market's coming back into my 90s here, it's a bit of an aggressive entry short, but that would have worked out in that case. It's never 100% clear, so that's why I always monitor how the basic uh, correlations have been working all day long, and if they kind of do shift, which they do, you kind of have to adapt to that. Hope this helps. It was pretty fun doing this review for this trader here. I think I went over a couple of nuances on how to look for this and what to look for when you're comparing your trades and your domes as well.